Yo, my people, welcome to the stream. Live and correct, 2 minutes late. Sorry for that, had some technical difficulties. If the sound is not good, let me know. Let's do this. Let's get straight into this. Let's jump into this markets. London is open. What does that mean? That means the London Stock Exchange is open. We got volume, we got liquidity flowing into the markets, and we're starting as always with gold. Good morning, Rio. Let's do this, man. Morning, Martin. Daniel. Good morning, guys. Nice to see the squad on board. Free minds, superhumans, prosperous. Let's do this. All right. Gold. So I want to talk quick about this sequence here. And by the way, my mouse is still, my computer is still lagging like crazy. I don't know what's going on with it, so I might have to reboot the whole computer. And if you haven't done that, you know it's some crazy work. You have to reinstall everything, so that's not something that you want to do. I'm trying to avoid it, but I might have to do it. Anyways, so, and this is why you're gonna see my mouse moving slow sometimes. But this whole sequence that we've been experiencing ever since, what was it, March? Yeah, it started like March 9. Sound is good, thank you, Daniel. It started March 9, and we've been on a bull rally when it comes to gold, all right? We had this first initial pump here, boom, like parabolic pump basically. Then it got a little bit choppy, but still though we had some nice crazy pumps in between, some drawbacks, yeah, and we continued. Well, what you guys see is this curve. This is also very like typical curve to always watch out for in trading, in the markets, and this is momentum taking off. It's basically losing its momentum. It's stagnating. All right. So what do I want to say here? Yeah. So first and foremost, the important thing is we reached our first target. I said the first target is around 2050 US dollars, and we reached it exactly, almost like we just underneath. Then we reversed down to come and retest the 2000 level, which is a significant key level. The thing is, we haven't seen a real drawback in the market ever since this pump started. We haven't seen a real drawback. We've seen these small drawbacks, but this is not real drawbacks. A real drawback is at least 38.2% retracement. So you want to see the 38.2 Fibonacci retracement hit, all right? The market is going to retrace with at least 38.2%. Now, it hasn't done it so far. Will it happen now? Very possible. Very possible. Why? I'm going to show you two things pointing at that. First and foremost, of course, we got a lot of liquidity and a lot of demand down here. Now, second of all, oh man, this thing is slow. Second of all, you see, like from the swing I just showed you, we have the 38.2 Fibonacci retracement confluent with the 88.6, which is the supply zone. The supply zone of what? I'm gonna show you. put it on daily. Shit, this thing is slow. All right, so from this swing here, from this last major drop that we had in the market, and I'm talking about a drop that was in April 2022, so 1 year ago. All right, we had this major drop, and in that drop, you find a major supply zone. So that supply zone is actually cleared by market coming up to this zone here, chopping around a little bit, accumulating, coming back down to the sweet spot, and then doing this pump that we've been in, like I said, ever since March the 8th. Now, back to the action. As I said, if we look at, where is it? Yeah, so if we look at this last swing, I forgot that we're on the daily time frame. If we look at this last swing here, this pump up, this sequence, then what is that we got the 38.2 Fibonacci retracement confluent with the 88.6, as I mentioned, forming a strong support. Now, I think that the market needs to come down here and do this, call it a healthy drawback to pick up liquidity and let off some steam and pick up new momentum for another pump up. Why do I believe that there will be another momentum? Why am I still bullish at gold? It's because of the fundamentals, and the fundamentals are pointing strong in gold's direction because of, like I always mentioned, countries accumulating gold in big manners right now, central banks accumulating gold in big manners, even private people, big whales accumulating gold. Why is that? It's because of the increasing loss of trust in the US dollar, but not only the US dollar, also the euro. So increasing loss of trust in fiat currency in general. And what happens then is that we look for alternatives. For 5,000 years, gold has been like the best option when it comes to trading. And then we got, of course, other options also, like Bitcoin, for example. But I think Bitcoin is going to crash quite hard first before it gets that last pump. But we don't know. We will see. I've been saying it for a while now. It might turn out not to be true because of these macro events in the world going on, and creating an incentive for people to actually accumulate and buy more Bitcoin. Now let's zoom in on gold and see what's going on here today. So first and foremost, we're on a daily time frame. This white line represents the 2000 level, which is like a significant level, of course, for gold. It's a level that it's been trying to break out from several times. Yeah, we can do that, Daniel. So, and right now we broke underneath it. We tested the 20-day EMA. I've changed color for you guys that have been on the streams for a while. I've changed color on the EMAs not to differentiate them a little bit from my Fibonacci levels. So the white line is now the 20-day EMA. The blue line is the 200-day EMA. So we bounced off the 20-day EMA on a daily time frame. We're back up and retesting the 2000 level as resistance. All right, let's zoom in on this and see what's going on. Maybe we got a trade even that we can jump into. So you see, we have a perfect retest actually on it, on the 4-hourly time frame. The only thing that, so this would show, yeah, this would show basically a nice sell opportunity. But what I don't like is this higher high that we have here. Higher low, I mean. Low, higher low. Or let's say like this. Low, higher low, higher low. And yeah, you might argue this wick, but actually don't take the wick into account. in this. I'm looking for where the candles opened and closed. So on the hourly time frame, we got gold right now testing the 20-day EMA and testing the 2000 level. So basically, we at a point where market is squeezed. We got buyers and sellers fighting right now. Even though it's the market open for London, which should push liquidity into the market, we still don't see a lot of action, and it's because market is squeezed right now in between these levels, and it's trying to figure out, like, are we going to break out down or up, right? And we don't want to be in that fight. We want to take the action in the direction the market decides to pull to. So with that said, let's look at some entries if the market breaks up or breaks down. First coffee. Good morning, Brandon. Coming with the energy. Love that. It has a low spread and not easy. All right, cool. I'll check it out, Daniel. Brandon, you working or you free now watching the stream? So hourly time frame. Let's investigate this thing here. And once again, if you wonder why my mouse is moving like an old retired person or something, it's because my computer is lagging as crazy. It's something wrong with it. I'm trying to figure out how to fix it. Okay, so first thing we see here, important. Y'all that have been with me for a while, you already know what I'm looking at. So we inside the sweet spot. Basically, we're inside a no trade zone. This is a no trade zone. These two yellow lines is a zone of liquidity, of high demand. And what will happen now is market is accumulating around here and trying to figure out in what direction it's going to go. So if we go for a buy, that buy would be above the zone. So basically here. And if we will go for a sell, come on, work with me here. And if we would go for a sell, then it would be somewhere around here. If we would go for a sell, I will look for the market to drop down to like 1950. I will show you guys soon why. Always free until 11. Nice. Love it, Brandon. Welcome. I sounded like, have you guys ever seen Cryptos Are Us? George on Cryptos Are Us? I used to watch him before. I always had this, welcome. My people. All right, so for a buy here, I would need to see some strong confirmation for us to go in for a buy. I'm gonna be honest with you, sell is looking more attractive than a buy opportunity here, but we will see. Thank you, Daniel. Oh, by the way, news. Good that you remind me. We got news today. I think it was today. Unemployment rate, something like that. We're gonna check it in a second. Important to know, because that's when we see in we can predict what a market is going to do, the big moves it's going to do. All right, so for me to enter or sell on this market, you see a lot of lines here. I might clarify this very soon. Just need to get a own picture and understand what's going on here. I wouldn't enter or sell before 1996. We leave these, what can it be, 30, 40 pips to the market, because this is a zone where we don't know, like, market can do anything inside the zone. Good morning, Yanis. Market can do anything inside the zone, so we don't want to trade on chance. We want to do calculated predictions on the market. All right, first and foremost, to enter a buy here, like, I wouldn't do that before I see a proper retest and sign of strength on top of this yellow line, so the 61.8 Fibonacci retracement. What will be a proper sign of strength? Well, basically reading candles. First seeing market come down, retest it, and showing like bullish candles that show sign of weakness when it comes to the sellers and strength when it comes to the buyers. So long wicks down are always, of course, preferred, especially on the bigger time frame, on the hourly time frame, upwards. But this is what I want to see before I enter a buy, because right now, if you're looking at the chart technically, it should drop. Like I said, it should drop and do at least a 38.2 retracement. And that retracement would land us. Now I got to remove some of these lines. It would land us here, down here. So we're talking about the 1955 level. That's a big drop. That's like 500 pips from where we are now. So if the market comes down there, of course, we want to eat along the way. So if we're going on sell positions, guys, everybody that is on my Telegram channel, if you ain't in the Telegram channel, link is in the description box of this video. But everybody that is in there, you know, I put always at least 4 TPs on gold when I call it out. If I'm looking at sell positions, I might even call 5 or 6 TPs, just to be able to catch this whole move. All right. And what will happen? We will have some short, very quick first TPs to secure profits and secure our trade. So we take the risk off the table, and then we let the trade run. To just like we did on the way up, like when we, what was it, 530 pips in one trade, and that trade took 1.5 days to do. So in 1.5 days, we secured 530 pips in with the same strategy. And it's a move I've been using, especially when I've been trading gold and crypto, because crypto, as you know, can also do these big moves. And when I see a big move brewing, I always do these. I put like 5 or 6 TPs, secure 2-3 TPs quick to secure profit, take risk off the table, and then we're looking for the bigger moves. Let it run. So that's that. Market is slow today, man. It's not much happening here. I'm looking for some action, but I don't know. Not much happening inside gold. Let's look at some other markets in the meantime. I want to give you some nuggets here, but I cannot give you anything right now because nothing is happening. It's making a little move up, but it's basically just playing around with this 2000 level, trying to decide if you should stay above it or below it. So we leave it like that for now. If we see market break up above the 61.8 retracement, then we can start looking at some better action. Let's. Oh, now you're moving. Let's look at the news. Let's see. Let's just have that cleared up. See what's going on today. We got what? Tuesday. Oh no, it was no news for US today. That was for Thursday. Tuesday we got GBP and we got CAD. Well, we got the CPI reading on CAD. So everybody trading CAD, keep an eye on that. If you're trading GBP, keep an eye on that. Claim and count change. I don't even know what that is. Oh, that already been. What? Guys, I'm not even gonna dive into this because I don't even know what that is, and I don't trade GBP, as you guys know. I trade it very seldom, so we stick to the markets that we trade here. CAD, if you trade CAD, I would recommend you to keep a close eye on this one because this is gonna affect the market a lot. This is gonna move all pairs against and for the CAD dollar, Canadian dollar. All right. CPI readings, monthly CPI readings, and yearly CPI readings are always highly impactful on the market. So that's that. So nothing with the news. So let's go into, what did you say? NZD USD. All right, let's check it out. All right, nice. NZD USD. Let's check it out. First, let's see what Manara got on it. What has Manara on NZD USD? Here we got it. But this one already played out. Yo, Daniel, that trade you're talking about, was that a trade from M-Minutes or something? Was it your own analysis? Let's go in. NZD USD. There it is. All right. Let's look at this. Let's start from the big picture. First and foremost, Daniel, good for you. If you want to buy, it's good. It's testing the 200-day EMA on the 50-minute time frame right now. So it's a good situation to take some profits off the table on the analysis. Daniel, just to remember, don't ride it too far, so you end up losing those 100 pips you accumulated. Like, always take profit off the table. Take profit off the table along the way. As you see, we come into a significant point when it comes to NZD USD, and that is the 20-day EMA on the 4-hourly time frame. 4-hourly time frame is always strong when it comes to EMA. Remember, when we're looking at these indicators, we don't base our trades on it. This is just indicators, just showing levels in the markets and optional directions in the markets. But it's not something that we're basing our trade analysis from. Because why is that? It's because what we see, remember, the market makers see this as well. Who are the market makers? It's the banks, institutions, hedge funds, pension funds, all of these big institutions that got the money to push the market in certain directions. And they see exactly what we see. They're always trying to play us out in these markets. Why would they want to do that? Because they're evil? No, it's not because of that. It's because of greed. It's because they need to, if they want to if they want to buy NZD USD for 50 million, let's say, they gotta be 50. They gotta be 50 million buy orders laying there, that or sell orders that you can convert to buy orders. If you don't got it, you need to move the market in certain directions to certain levels where the demand is. That's why we got the demand zone, we got the supply zone. So we got zones where we got a lot of people that want to sell, or a lot of people that want to buy. And when we move markets in those directions, we can fill those orders. So they play a whole nother game. And when they want to stop us out from the markets to switch our orders, let's say we're in buy positions, they want to they want to dump the market. So they want to trigger all our stop losses. So our buy orders convert to sell orders. When they do that, they look for these levels that indicators show, because they know that most traders, most retail traders, us, we look at these indicators. So always keep that in mind. Be aware of that. Keep and buy 3 trades. All right, Janice, I'm gonna take it. I'm gonna check it. Ah, you mean Yanis? You mean Itina or Sina? Daniel, are you in a buy? Yeah, you got to be in a buy if you're 100 pips up, because be aware of this level here. Be aware of this level. The 200-day, the 20-day EMA on the 4-hourly time frame. It's like this candle and that line will cross at about 0.62100 is the level to watch out for, and where I would take some profit off the table, definitely. If you haven't done that, you need to do it ASAP. Okay, Daniel, you got me confused now. Both at 1954. I think you got the numbers wrong. Okay, Janice, to be honest with you, I ain't got no GBP CAD. It's not my market. Sina, right, Sina. That is not my market. Igor, welcome. Good morning, man. What type of trader are you? And what lot size you use usually? What type of trader I am? I am a day trader. Scalp sometimes, but when I do that, I don't stream it live because of the latency, because of the lag. So whatever I'm saying here now, it takes about 5 seconds until it comes to your YouTube channel, until you see it or hear it. And those 5 seconds can be detrimental when scalping. So I don't stream my scalps live, but I day trade, and this is what I'm streaming live here now. And I trade mostly gold, Bitcoin, and Euro USD, but I haven't looked at Euro USD for a while actually. Maybe we should do that. What lot size I use? It depends on. Right now I'm using lot size between 1.0 to 5.0. Why is that? It's because I got a 50K funded account that I'm trading, so that's that. And why I vary is, and I say this always, like people have these firm, like, okay, you have a $1,000 account. For $1,000 account, you should use a 0.1 lot size. It's not certain. It's not always the case. It depends on how big the stop loss is. If the bigger the stop loss is, the more pips you have in the stop loss, the more you have to cut up from your lot size, because you always want to have the proper risk management. So if your risk management is that you want to lose maximum, let's say 2% of your account in each trade, you want to risk maximum 2% of your account in each trade, then you have to adjust your lot size accordingly depending on how big the stop loss is. All right, nice. So Daniel, let's summarize this NZD USD. Let's get to the point with this. First things first. Here, all of this definitely a take profit level. Let's zoom in on this. What I think will happen is this, Daniel. I'm gonna tell you what I see here for this market. First and foremost, as you see, we are trapped inside the supply zone. So market is trying to break out from the supply zone. These two red lines here, right? You're welcome, Igor. Second of all, we saw that 20-day EMA on a bigger time frame, and that's the resistance that we have to break through. But I think we will wick through it and come and come and test this resistance zone here. All right, we got the 38.2 retracement of this drop that we've been seeing here, like this whole drop down. 38.2 retracement is here, important level. But then we got also from this last smaller drop, we got the 127.2 fib extension. So these two almost correlate perfectly and forms very strong resistance around here. Correlating with that, we got the 200-day EMA coming down here, and it will basically be almost at the 27.2 at the time when this market reaches this level. So this here, strong sell point. I would sell already at the 20-day EMA that we saw on the 4-hourly time frame, but last level I would sell here, and also maybe looking for a reverse in the market. Maybe we're looking for sell actually down to come test these levels again as support, but that's a whole nother story. So that is what I'm seeing for NZD USD. So definitely no trade. Oh wait, let me hold that for a second. Let me see what's going on right now. Yeah, so what's good for you, man, is that we broke above the 200-day EMA on the 50-minute time frame and the 88.6 Fibonacci retracement. Love that. Very strong sign of I won't say bullishness, but yeah, upwards momentum. So this one here is definitely a buy. This buy here is coming up to at least, man, to be honest, it's a scalp 0.62100, because that's the level that we saw the 20-day EMA on the 4-hourly time frame. But I could easily see this one coming up all the way to the zone here that we are talking about. So at least to 62,200, something like that. But I would secure my first profit at 62,100. So that's a scalp. I ain't jumping into it because it's not my market. I'm not confident with NZD USD just like that. I would need some more confirmations from, I don't know, something like news, fundamentals, see some other charts on it, like some other analysis on it. Yellow Brick Financial LLC, good morning. Thank you for going live. Gold is breaking 23. Would you enter or buy? Thank you for alerting me on that. Let's dive back into gold and see what's going on there, man. I got distracted by NZD USD. No worries, but we saw some. It was actually nice looking at some other markets for change. I've been staring myself blind on gold lately. So let's look at this. Gold, boom. What do we got? Oh shit. All right, so first and foremost, we got a breakout from the no trade zone, these two yellow lines I was talking about. Okay, cool. But I definitely don't feel confident to enter a buy here, because this here can very quickly turn back down. So for me to enter a buy now here at gold, I want to see this. I want to see this 200-day EMA rejected and market come back down. And as I said before, come and retest this 61.8 Fibonacci retracement from the last drop we had, and show sign of strength, show some nice doji spinning top candles, show some nice wicks downwards that shows that sellers actually don't have control of the market and that the buyers are pushing like have more momentum upwards. All right, if that happens, we definitely in for a buy. If that doesn't happen, I'm looking for market to break straight back down here, and maybe we're going for sell then. Sell, to be honest, looks technically more attractive for the market right now. Let's look at something else. For y'all that have been seen my trainings, y'all know how I analyze if liquidity is going in or out from gold. So let's look at that. Right now, you see US dollar is dumping. This is also what pushes gold upwards. Now, let's do this. Rio, you know what I'm about to do. We're gonna measure this 4-hourly candle that we got here, the last one before it closed. From the top, boom, to the bottom where it closed. Come on, work with me. We have done a drop of, that candle dropped 0.17%, okay? It dropped 0.17%. Now let's see what gold did on the same time frame, on the same opening and closing time. So the same candle basically. And it's this candle here. As you guys know, gold moves in reverse for the US dollar. So when the US dollar drops, gold goes up. So when that candle dropped 0.17%, this candle pumped. Oh, it's looking good. This is looking good. We pumped 0.28%. What does that mean? That means that liquidity is coming into gold. That means that gold moved stronger than the US dollar dropped. So liquidity is moving into gold right now. And this is bullish. This is good. This means that the buy bias. So the bias for us to buy, our sentiments to buy, has become much stronger. All right? You with me so far? Yeah, hey, Brandon and Rayo, guys, I'm doing the family call on Sunday. So type it in the family chat, in the Free Minds chat, what you want me to do the family call on. If there's something specific, because I'm trying to figure out, should I do it on social media, on trading, and if it's on trading, what should it be on trading? So let me know. Type it in the family chat, and yeah, man, or just send me a DM. We'll take it from there. Because I want to do what most people, like most of our members in the Free Mind Squad, needs a training about. Nice, man. Yeah, so guys, like I want to call out all these actions. Sometimes you guys that have been on these streams, sometimes we go into the stream and like I barely even get the chance to open my mouth and there's a trade. We jump into trade directly, like we see trades directly and we catch pips. But sometimes, like now, for example, it gets difficult. Market is very uncertain. It's like it's testing in what way to go. Nobody wants to make that big move yet. Nobody wants to, show their feet. Get the feet wet. Really, everybody's just waiting. In what direction will the market move towards? And always when market is behaving like that, you don't want to jump into the market. You want to wait. You want to see market move with volume in a certain direction. Now it's easy to get greedy. It's easy to get greedy and be like, okay, shit. But if I wait until market hits this level for a buy, I miss all of these pips here. Let's say it's 40 pips. Yeah, but how do you know that you would catch those pips? So let's say you want to enter the market here. How do you know that the market will come up here? Because this is a zone where market actually doesn't know itself and what direction it's going to pull towards. Even the market makers are not really sure about what direction to push the market towards. So you always want to see those clear directions. You want to make calculated moves with proper risk analysis. All right. This is how you become a profitable trader in the long term. If you want to take a chance and make some quick bucks, do your thing. But I can give you other suggestions. You got the casino also. You got poker. You got roulette. I'm joking. I'm not gonna be that wild with y'all, but you understand what I mean. You understand my point. We don't want to take chances like that here. We want to do calculated moves. So still, nothing is happening here. I'm even going down on a 5-minute time frame now. 5 minute, yeah, it's coming down to test this level, but it doesn't mean much. The lower the time frame, the weaker the candles are. So the weaker the signs are, so to say. So what we're looking for now, what we're waiting for is market to come down, retest the 61.8 retracement. I want to see some strength there, and that's when I will call out a trade. If you ain't in the Telegram channel, link is in the description box below. I will call out the trades there. I will keep you guys updated on these charts there. Right now, to be honest with you guys, I don't see nothing. I'm gonna take a quick look at Bitcoin. Why is that? Because as you see, I'm in a trade here. Already took two to take profit. Sorry guys for not calling it out on the Telegram channel, but to be honest with you, I wasn't very confident with it, so that's why I didn't do it. I don't want to risk your money. It's enough with me risking my money. But what we're doing now is we are on a resistance level, so I might actually call out a sell on this one later on. But I have to go now. I have to finish this live stream now. So I see you guys in the chat. Yeah, man. Stay prosperous. Stay blessed. Have a wonderful day. Peace out.